This video is my biggest concern for buyers and sellers in today's housing market. There are many leading indicators that are happening right now that concern me about the future of the housing market. And I will get into them momentarily, but I want to start with something that happened last night where I went to a party. And truthfully, it's been a while since I went out partying, but nonetheless, my wife and I went out to a party and it was an incredible experience. We had a great time, lovely party, lovely people. And when I go to parties similar to this, it's not unusual that people will approach me and have many questions about what I think about the housing market. And so most of the time when I attend parties like this, 20-30% of the conversation is going to be about what's happening in today's housing market. And everyone wants to know what's likely to happen next. And if you've been watching for a while, you know that I'm happy to talk at great length about the housing market. But when I make these videos, it's one-sided. And when it's in person, I get to have a lot of feedback and I get to ask questions. And whenever I talk to somebody who's interested in knowing about the housing market, what I'm very curious to know is what they think about the housing market. I want to know what they think about the economic conditions. I want to know what they think about the future. I want to know what their sentiment about the market and the future is, because I find that to be very instructive. Because I can read every opinion poll in the world, but I'd like to know what people actually think. I want to know what their sentiment is, and I want to know what their perception of reality is, because I know that their perception is their reality. And so I got to have lots of conversations last night, and it alarmed me. It concerned me because every single person I talked to at this particular party, and yes, it was a small sample size, everyone was very bullish in regards to the housing market, in regards to their economic future. And yes, I'm aware we were at a party and people are drinking and they may have a different opinion in a different setting. But the overall impression that I got from everyone there was they felt very safe, very secure, and very wealthy. And without getting too granular or too personal or becoming the guy that nobody wants to talk to at the party, I did ask some more probing questions. And I wanted to learn why they felt that way. And what I learned was that everyone feels incredibly wealthy because of the equity in their home. Many people there felt very wealthy and safe and secure because of the value of their stock portfolios. A lot of people feel very safe and secure in their job and in their earning potential, which is great. And that's what I hope everybody feels. But I also am very aware how quickly that can change and how quickly that wealth effect can be totally eviscerated by market conditions. And so I wanted to do a little bit of a deep dive here onto some things that have happened recently in the stock market because they definitely got my attention. And I clearly remember what the stock market was like when we had the great financial crisis. And I remember vividly exactly what it was like to talk to clients during the chaos of this crisis and manage their expectations, manage their fear, and put a game plan in place because it felt as if the world was ending. Everything was at risk. We were on the precipice of financial collapse. Banks were failing left and right. The stock market was tanking on a day-to-day basis. 500,000 points, this, that, and the other. It was complete chaos, and fear and uncertainty were the order of the day. And so, full disclosure, we are not there yet, but the conversations that I had yesterday actually gave me great pause. It actually scared the bejesus out of me because it seems as though everyone forgot that what goes up can also come down, and that what your equity and what your asset values and what your stock portfolio looks like today does not necessarily mean it will look like that tomorrow. And so today I want to do a little bit of a deep dive on some things that I've seen recently that are leading indicators, which will give us a pretty good idea as to what's likely to happen in the future on a macroeconomic level. So I'm going to go into that right now, and I hope you find this content valuable. If you do, please subscribe to the channel, share it with a friend, give it a thumbs up, and leave any comments down below if you've got them. And before I get too granular, I want to start at a high level overview. I want to share what an economic bubble burst looks like. And this chart is very instructive. And what you can see, and you can use any asset class for this that has been in a bubble. They are all the same. This bubble chart holds true to every single asset that there is, up to and including real estate, the housing market. And while it's yet to be determined exactly where we are in this cycle as far as the housing market's concerned, I think it's important that everyone understand that what goes up must come down. And it's only a matter of time until history repeats itself and the cycle plays itself through, because every single thing is cyclical and must go through the cycle. Irrespective of whether we're talking about economies, bonds, stocks, investments, real estate, housing market, doesn't matter. All of this applies. And so it starts in the stealth phase where things start to take off, then an awareness phase by the consumer. Then we start to see things sell off a little bit, have a bear trap. The media takes hold of it. Then we've got enthusiasm. The public gets excited. Then they start to get greedy, which might be sellers depending on where you're at in the market cycle. Then delusion, which I think we're in a stage of delusion right now. And then we get to the new paradigm where things start to sell off and the bubble starts to burst. And first up is denial. And the reason I'm sharing this chart is because my conversations last night led me to think a lot of people are in denial as to what's actually happening right now. And my job is to present you with the most information so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And I don't want anyone who watches this to ever be in denial. I want you to be empowered. And so that's what this is all about. So from denial, what do we have? Well, we have a sell-off and things start to go down. Now, if you've watched any of the recent news, you'll notice that in many markets, we're starting to see a sell-off. We're starting to see home prices go down, depreciate. And there are many markets out there that are experiencing this currently. Now, my particular market is not there yet. I think we're still probably somewhere here in this greed or delusion space. Yet to be determined, I don't know. Time will tell, but I will always tell you the truth in real time so you know what's going on. But nonetheless, denial. And from there, we hit what looks to be a bottom. And this is the bull trap. Well, I could make the argument this also coincides with when interest rates go back down. Because earlier this year, or excuse me, earlier last year, when interest rates jumped up to 7% and everybody got spooked and demand fell off a cliff, well, what happened? Prices came down in many places. Not everywhere, but sales fell off a cliff across the board everywhere, period. My market is no different. In the most recent numbers, we saw sales drop by 42%. That is a major paradigm shift. There are a lot less buyers out there buying, and there are many reasons for that, but for now, let's just stick with this chart. And then from there, what happened? Well, the latest numbers came out, and the Fed did raise rates, but they didn't raise them as aggressively as they could have. And what did we see? We saw a spike of buyers come back into the market, and things began to return to normal. Well, how long will that normal last? It'll be interesting to see because the latest round of economic data has been no bueno, and the Fed is very likely to increase the Fed funds rate by a half basis point. Yet to be determined, I don't know, but what's happened in the interim? Well, mortgage interest rates are on the uptick, and now they're north of 7%. If you've got exceptional credit. If you don't, it's significantly higher. But nonetheless, what do we see? We see, or at least it feels like, a return to normal. What happens next? Well, I don't know what the Fed's going to do, but I can see what they say they are going to do. And they have indicated they will continue to be hawkish. They will stamp out inflation down to 2%. And what does that mean? It means that interest rates are going higher. Now, in the past, I've talked about I expect to see 10% interest rates. And while I don't know if that's going to happen, I do know that if they are 10%, there's a lot fewer buyers who can afford to buy homes given the current market dynamics, given the unaffordability of prices of homes, of home values, but now the astronomical cost for their monthly budget to afford a 10% mortgage payment. Most people don't have the money to be able to afford that in their budget. And then what happens from there? Fear. And when fear actually hits the consumer, and best I can tell, nobody really is feeling fear. They might be concerned, but I'm not fielding phone calls from clients who have just lost 80% of their stock portfolio in a week. I'm not seeing that today. I haven't experienced that in a long time, but I remember when that was the case. And so when people feel as if they are not wealthy anymore, they take drastic action to get out and reduce that pain. What is the most likely thing that they are going to sell if they must? The thing that has the most equity in it right now. The last thing that falls in the economic cycle, meaning your stock account could get blasted this week. Your house value is not going to get blasted for months or years because that's the nature of the economic cycle. It takes a lot longer for homes to sell. It takes a lot longer for the pain of recession or stock market sell-off or collapse to hit the housing market. But it must happen at some point. To what degree, to what extent, I don't know, but it absolutely has to happen. And as you can see in this chart that goes straight down, fear, capitulation, despair, blood in the streets. And I don't actually mean blood in the streets, but I do mean fear is pervasive. And that is when Warren Buffett has always said is the time to buy. Be greedy when others are fearful. And that will happen too. And when it does, that's when things start to go back to normal. That's when the market comes back. That's when your home values appreciate and everything else does too. You hit a bottom and then you return to normal. But we have been in this region for a long time, and each market is different. They don't trade all the same way, but make no mistake, this is where we're at. And so you must know that if you're trying to time the market, which is not what I would ever suggest anybody do because it's almost impossible to time any market. I'm never going to get the top of the market. I'm never going to time the bottom of the market. I'm not that smart, and neither is anyone else. But you must know what this bubble burst cycle looks like, and that's why I'm sharing it. Now, does that mean that you should not buy a home if you can afford one and you negotiate a great deal and you intend to live there for the next 10 years? No, it doesn't mean that at all. But it does mean you must be aware of what is happening so that you can govern yourself accordingly. Because right now, interest rates are around 7%, plus or minus, yet to be determined. We'll see on Monday what they are. But everything that I see right now tells me interest rates are going significantly higher. So if you can afford the payment on a 7% mortgage or whatever it might be, and you're happy with the home that you intend to live with, and you can absorb the financial responsibility of whatever choice you're making, well, then there's nothing to be concerned about because over time, these things will play out and real estate and home values will continue to appreciate. But we're entering into a very unknown cycle. We're entering into a very volatile market space. And I wouldn't be doing my job if I didn't share this information with you. Now, my intent is not to scare the bejesus out of everyone, but I do want to see what analysts think. Now, full disclosure, analysts are wrong all the time. So I don't take a heck of a lot of stock in what every analyst says, but I do want to see what the prevailing sentiment is out there. And right now, you've got Morgan Stanley's top strategists that say that US stocks are in the death zone and they could crash 26%. Now, I don't really know where they came up with 26% and not 50% or 80% or 10%, but there is an analyst opinion out there. There is sentiment out there that thinks the stock market is ready for a big fall. And I don't disagree. I expect that we're going to see a massive equity sell off over the course of the next year. And I share that because the stock market is a good predictor as to what will happen in the future in other markets. It is a leading indicator. So if there are big companies that are out there that are warning about what their earnings look like in the future that happen to be in a sector related to the housing market, I want to know that information because it tells me it's no bueno for the future or for the consumer. And I also know that when people feel less wealthy, when people take a big hit financially, even if it's only on paper, because again, if you have a stock portfolio and you don't sell at the lows, well, then you don't actually incur a loss. So, prudent, smart investors who have money typically then re-asset allocate and double down. And they build bigger positions in the best of breed companies that are on sale. But by and large, most folks, when they see the stock market is down significantly, they become scared and they feel less wealthy. And when there is fear and uncertainty, they act differently than they do when they feel like they're wealthy. How will that impact the housing market? Yet to be determined, but I suspect it's no bueno. Which takes us back to inflation, which takes us back to the Fed. Inflation must be stamped out. That is what Jerome Powell has said. That is what the Fed has been doing. That is what they are aggressively trying to get their hands around. And what did we see in January? Well, the key Fed inflation measure rose 0.6% in January, more than expected. Well, no bueno. And what does that mean to us? Well, I think it means that the Fed is going to raise Fed funds rates and continue to do so into the future. And at what rate, at what pace, yet to be determined. But we know they're going to do it. And although mortgage interest rates are not directly tied to a Fed funds rate hike, they are absolutely impacted by it. And we can expect that mortgage interest rates are going to continue to uptick. Now, I'll steelman that case. If they go down, if policy changes, well, then that changes things and you can refinance and you've got other options. And also, more buyers will come into the market. But I'm not talking about what I think might happen in the future when everything is great. I'm talking about the economic reality of what's happening now when things are no bueno. Inflation is still going higher, and we must know what that looks like in order to know what to do next if we're thinking about buying or selling. But the numbers suggest that inflation accelerated to start the new year, putting the Fed in a position where it will likely continue to raise interest rates. Well, I'll say that differently, where they're 100% guaranteed to continue to raise interest rates. All right, so as you can see in this home value index by county, January 2023 numbers as sourced by Zillow, you're seeing massive appreciation from 2018 and 2019 numbers, 64% and 56%. January 2023 numbers came in at 525, 332. Huge jump from 319 in 2018. But that is not unique to Palm Beach County. It is all over the country. We've seen massive appreciation across the country. And most homeowners who have lots of equity, as of right now, just like the folks at the party that I went to last night, they all feel wealthy because they think they're sitting on several $100,000 of equity in their house. Now, to be clear, these numbers are very different within different cities in Palm Beach County. And I'm going to talk about Boca, Delray, and Boynton next. But you can see the numbers have gone through the roof. And now I'm going to get a little bit more granular, talk about Delray Beach. I'll follow that up with Boynton and Boca Raton. But closed sales, big drop, down 44%. Median sales price up 60, damn near 60%, from 640 in 2022 to over $1 million. Average sales price jumped 26% to 1.354. Dollar volumes down because closed sales are down. Original list price down 6.6%, almost 7% at 91%. So that could be a function of overpriced listings. It could be a function of buyers negotiating better deals. And that's certainly what our experience has been here recently. We have been negotiating some of the most incredible deals that we've ever been able to do in the last few years. In fact, last week we got a home under contract 40% lower than original list price. And full disclosure, it was radically overpriced to begin with, but that seller had to feel that pain. They had to get kicked in the teeth by the market for about a year before they got reality based. And we happened to be at the right place at the right time with the right buyer, negotiating the right way, and we got them the deal of a lifetime. And I'm not going to go into detail as to how much higher the appraisal was relative to where we purchased it at, but suffice it to say, my buyer is doing cartwheels because they're walking into a metric shit ton of equity. And I can do the same for you. But all right, let's keep on trucking. Median time to contract takes longer, up almost 70%, 56 days. Now, if you've watched my content in the past, you know I've talked about 56 days is not a long time to go under contract in a normal market. But the days of 2 days under contract or a week, those days are primarily over unless you know how to price and market the home the right way, which we do, but most people don't. Nonetheless, pending sales down 17%, new listings up almost 13%. Inventory of homes for sale up 92.5%, and month supply of inventory up 183% at 3.4 months. 3.4 months is still a seller's market. February numbers are very different and they'll be released at the end of March, but I will continue to share what's happening in real time. Which takes us to Boynton Beach, which happens to be the city that I live in. Now, again, and I hope this is very clear, I'm talking about the 5,000-foot overview for single-family homes in these cities. The micro markets that exist in these cities also trade very differently. So not every market within the market is going to trade with the same intensity or the same price point, but it's good to know what the trends are from a big picture level. And then as you start shopping and you know where you want to be, we can obviously get very granular and very detailed. But the overall trends, closed sales down 37%. Median sales price up almost 10% at 516,000. Average sales price, which is the number you want to actually pay attention to, up 13.5% at 582. Original list price received down 6.4%, 92.5%. Again, could be overpriced listings or buyers negotiating better deals, and I suspect it's the latter. Time to contract up 188%, 49 days. Pending sales down 20%. Inventory of homes for sale up 121%. Pending sales down 20%. New listings, and this is a key thing to pay attention to. New listings are down a half a percentage point. Well, why would that be? Right now, in today's market, where the homeowner is equity rich and in an interest rate which is likely to be less than 4%, are they really willing to trade up into a new mortgage, which is likely going to be double what it costs right now on a monthly basis to live in a home? I suspect probably not. So I'm not necessarily surprised that new listings are down, which is why we still have a shortage of inventory in many markets within Boynton Beach. But what a lot of buyers don't know, and they should, is that if you have leverage and you can negotiate, you can also negotiate your interest rate down in today's market. So the fact that interest rates are 7+% does not necessarily mean that would be the interest rate that you're going to pay if we can negotiate the right deal. So just know you're not trapped. And I can make the argument that there's never been a better time for a move-up buyer than right now because of the leverage that we've got due to market conditions. But as these conditions change, it'll be interesting to see how much more leverage we actually have. But let's keep on trucking. Inventory of homes for sale up 121%. and months supply of inventory up 180%. 2.8 months from a month. That's a seller's market, which is great if you're thinking about selling. But please keep in mind, there are a lot less buyers out there qualified and able to buy your home. So it is critical you work with the professional who is able to put those deals together. But let's keep on trucking. That's Boynton Beach. Let's look at Boca Raton. And Boca Raton looks very similar to the other two markets also. These trends are going to look very similar in most markets within South Florida. But this is what they are. January 2023 numbers. Closed sales down 33%. Median sales price up 33%, 965. That number is meaningless. We must focus on average. Average sales price is up almost 33%, 1.414. Big number, big jump. Is it sustainable? Time will tell. Percentage of original list price received. This is a very telling number because it's down big time. This is the biggest percentage drop I've seen in a while. Down 9%, 89.4% from 98.4%. Well, is that a typo? Is that my dyslexia? No, that is the truth. 89%. What does that mean? It means that buyers are negotiating better deals in today's market. So if you're thinking about testing the market and playing the lottery and overpricing your home in Boca Raton, just know ain't nobody got time for that. You're 100% going to get forced to face the reality, which is that you must negotiate, and good for these buyers, they got a nice discount. Median time to contract up 62%. That is a big jump. 60 days, although more in line with historical norms, is a lot longer to sell. Pending sales down 26%. New listings up 20%. Inventory of homes for sale up 102%. And month supply of inventory up 192%. Trending to neutral, but still a seller's market. Big jump from 1.3, but as you can see, 3.8 months. And it's taking a lot longer for those homes to sell and at an 89% rate of original list price received. So if you're thinking about buying in Boca, chances are you're going to be able to negotiate one heck of a deal. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, and check out my next video because I suspect you will love it a lot. And until next time,